Can a non-resident landlord file jointly with their spouse in Canada? If you and your spouse co-own rental property in Canada but live abroad, you might wonder whether you can file your Canadian rental income taxes jointly the way couples do in many other countries. It seems logical. One property, one household, one tax return. But the Canada Revenue Agency, CRA, has its own rules. Unfortunately, they're not always what non-residents expect. Here's how the CRA handles spousal ownership and filing for non-resident landlords. The short answer, no, you can't file jointly. Unlike in the United States or the UK, the Canadian tax system is individual-based, not household-based. That means every person, resident or non-resident, must file their own tax return and report their share of income separately. Even if you share ownership 50-50, you and your spouse are treated as two distinct taxpayers. There's no such thing as a joint Section 216 return. So, if both spouses earn Canadian rental income, each must file their own NR6 form if electing reduced withholding, have taxes withheld on their portion of the rent, file a separate Section 216 return by June 30th of the following year. How to split the income correctly? The CRA requires that rental income and expenses be split based on ownership percentage, not who manages the property. Example: the property earns $24,000 in rent and incurs $8,000 in expenses. Each spouse owns 50%. Each reports $12,000 in income and $4,000 in expenses on their Section 216 return. The CRA doesn't accept arbitrary splits to reduce one spouse's tax burden. The percentage must match legal ownership or the purchase agreement. What about property owned in one spouse's name? If only one spouse's name is on the title, only that person is legally responsible for the rental income and tax reporting. However, if both contribute financially, it's wise to document the arrangement clearly in case the CRA ever asks about shared investment sources or income allocation. Filing benefits still exist for married non-residents. While joint filing isn't allowed, spouses may still benefit from sharing deductions proportionally, like mortgage interest or property taxes, coordinating Section 216 filings to ensure both returns use consistent income figures, streamlined CRA correspondence when both spouses use the same representative or accountant. Some tax treaties may also provide benefits for married couples, depending on their home country's agreement with Canada. Documentation is key. For co-owned properties, always keep the property deed showing ownership percentages, all rental receipts divided accordingly, separate records of each spouse's share of income and expenses, CRA correspondence for both parties. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.